XRP community, the moment we've been waiting for might not play out the way many expected, because while everyone's been looking toward approval and celebration, there's a darker possibility quietly being whispered in the halls of Washington and Wall Street, that the SEC could deliver a regulatory shock instead of a green light. And tonight, we're diving deep into what a denial of the XRP ETF could actually mean for Ripple, the market, and every investor holding through the storm. This is not just about one product or one ticker symbol. It's about the entire foundation of legitimacy and trust that Ripple has built through years of legal battles, partnerships, and perseverance. Imagine the psychological impact of a denial after months of hype, months of analysts predicting inflows, and traders expecting an XRP explosion. Now imagine what happens if the opposite headline hits the wires: SEC denies XRP ETF proposal. The initial reaction could be shockwaves through the market, fear-based selling, liquidity gaps, and emotional panic across exchanges. But behind that panic there's another side of the story. Because denial doesn't necessarily mean defeat, it can also spark a deeper evolution, an institutional recalibration that sets XRP up for its next phase of strength. We've seen it before. Regulatory shocks often clean the system, filter weak hands, and prepare the ground for long-term dominance. The SEC's denial, if it happens, would come with reasoning, official statements, and language that the market will dissect word by word. Phrases like insufficient market maturity, lack of surveillance sharing agreements, or ongoing enforcement clarity would dominate the narrative. Each word would become fuel for analysts, influencers, and traders across the globe. Ripple's leadership, Brad Garlinghouse, Stuart Aldarity, and the entire executive team would immediately respond, perhaps even within hours, with statements emphasizing stability, compliance, and readiness for appeal. They've played this chess game before, and every move the SEC makes simply defines the next legal counter. In fact, some insiders believe that Ripple might actually benefit from a short-term denial, because it could accelerate the final stage of global regulatory convergence. Other jurisdictions, like Dubai, Singapore, and the EU, are already approving or recognizing XRP in regulated frameworks, and a US denial could highlight just how out of step the SEC has become with global policy momentum. Think of it like a delayed takeoff. The flight hasn't been cancelled, it's just circling before landing on a runway that's about to be cleared, and when it finally touches down, XRP could emerge not just as a speculative asset but as the symbol of endurance in crypto regulation. Now let's talk about price dynamics. The emotional cycle will be key. The initial drop might be brutal, but it's often followed by a strong recovery phase driven by accumulation. Data shows that every time XRP faces extreme regulatory pressure, whether in 2020, 2021, or during the lawsuit's climax, its long-term holders doubled down, buying the fear that retail sold. This time could be no different, especially if on-chain data shows institutional wallets quietly absorbing the supply that panicked investors dump. Exchanges might even see record transfer volumes as whales reposition themselves for what comes next. Because denial doesn't erase the technology, the partnerships, or the trillion-dollar utility potential that XRP holds in the banking and liquidity world. And make no mistake, Ripple has been playing the long game, even without an ETF. Their infrastructure, RippleNet, on-demand liquidity, and global partnerships, continues to expand. An SEC denial might slow the hype, but it won't stop the adoption. In fact, it could motivate Ripple to take a more aggressive stance on pushing international use cases beyond US borders. And that's where the story gets interesting. Because if the SEC denies the ETF while other countries move forward with Ripple-backed products, the narrative flips entirely. Suddenly it's not Ripple on trial, it's the US regulatory system itself. This could become a geopolitical moment where the world watches America either embrace or reject innovation. Now imagine how the headlines evolve from there. US denies XRP ETF approval, EU moves forward, Japan and UAE expand XRP adoption, Ripple announces global settlement network expansion. It paints a picture of contrast, of tension, of opportunity born from resistance. But let's not ignore the emotional layer. The XRP community has been through hell and back. They've faced FUD, ridicule, and regulatory uncertainty. A denial would sting, no doubt. But this community has proven one thing time and time again: they don't quit, they don't fold. And when things look darkest, that's when XRP holders rally the hardest. This is not financial advice, but historically, when markets experience this level of emotional intensity, that's often where long-term opportunity hides. Remember what happened after Bitcoin's ETF delays in 2021, or Ethereum's futures rejections years ago. Denial wasn't the end, it was the precursor to maturity, to growth, and, eventually to acceptance. The same pattern could unfold here, only this time the spotlight is on XRP. The asset that has already survived the impossible. The question is, can it turn another obstacle into fuel for the next breakout? By the end of this video, we'll explore 3 possible market outcomes. First, the short-term sell-off phase and how traders can navigate it. Second, the mid-term accumulation phase where smart money prepares for round 2. And third, the long-term structural shift that could redefine XRP's place in global finance forever. Because at its core, this isn't just about the ETF, it's about legitimacy, access, and perception. The SEC may think a denial would discourage adoption, but history shows that innovation doesn't wait for permission, and Ripple's mission to revolutionize cross-border payments and liquidity is already too deep to stop. So XRP holders, buckle up, because no matter what happens next, this is the moment where history divides the believers from the doubters, and by the time this cycle ends, the world will know which side was right all along. XRP isn't just surviving regulation, it's redefining it. By the end of this story, you'll understand why a denial could secretly be the greatest gift the SEC ever gave Ripple, and why those who keep faith through fear might soon witness a comeback unlike anything the crypto world has ever seen. XRP's story isn't over, it's only just beginning. Stay tuned, because what comes next could shock the entire financial system. The XRP market sits at a crossroads, a point where every trader, every analyst, and every institution is watching the next move with surgical focus, because if the SEC truly denies the XRP ETF, the ripple effects, no pun intended, will extend far beyond a single asset. It will redefine how America treats blockchain innovation, how investors allocate capital, and how global liquidity reshapes itself in response. Imagine the timeline. Within minutes of the decision, headlines flash across CNBC, Bloomberg, and Twitter feeds explode with emotion. XRP plunges in the first wave of reactionary fear, exchanges light up with liquidation events, leveraged positions wiped out, stop losses triggered, volatility index spikes, but under the chaos, under the red candles, something deeper begins: strategic accumulation, quiet positioning by those who understand that markets overreact before they normalize. Ripple's executives issue a statement, calm, precise, filled with words like clarity, innovation, and long-term vision. Brad Garlinghouse appears on camera reminding everyone that Ripple's business model does not rely on ETF approval, that XRP's utility continues in cross-border settlements, that demand from institutions and payment corridors remains unaffected. The message is clear: this denial does not define the technology. It only delays the recognition. Analysts begin dissecting the SEC's language. They highlight inconsistencies, pointing out how Bitcoin and Ethereum ETFs were approved despite similar structural risks. They emphasize selective enforcement, the ongoing shift in political sentiment, and how regulatory frameworks like MiCA in Europe or Dubai's VARA are now outpacing the US. This fuels a global debate. Has America just fallen behind again? Has innovation once more been pushed offshore? Meanwhile, Ripple's legal team quietly evaluates the next move, a potential appeal or revision to the ETF filing. Perhaps even a shift toward alternative products like ETNs or trust structures. We've seen Grayscale and others take similar paths, turning regulatory setbacks into long-term leverage. The XRP community begins to understand this isn't a loss, it's a setup for round 2, and round 2 could be even bigger. On the institutional side, hedge funds start positioning, data analytics firms notice unusual wallet activity, millions of XRP moving from exchanges to cold storage. Well, clusters consolidating, on-chain patterns similar to pre-breakout phases seen in past market cycles. The smart money is never emotional, it's strategic, and right now, that strategy seems to be patience. International markets respond differently. In Japan, SBI Holdings releases a statement reaffirming its XRP usage for remittance solutions. In Singapore, Ripple's ODL partners increase transaction volume,